Are you all there? Good morning, everybody. As usual, we start on a very cheerful note. Good morning. As I said, as usual, we start on a very cheerful note. Smile, everyone. A very big smile, ear to ear. Okay? Nice big smile. Okay? Ready? Good morning. Namaskara. Namaste. Sabal Khair. Shob Khair. Am I right? I don't know. Yeah, good morning. See? Please open your slides. IFM1. Please open your slides. Okay. Now, today I'll start with your slides about giving you something current in the current world. I'll give you in a while. Okay. I have to clean my HP laptop. It's slowing down. Okay. Plus, what's special about international finance, etc. We are going today. As I told you, it's easy dealing with someone in Bombay for a Bangalorean. Alright? You send goods to Mumbai by lorry, maybe, and the Mumbai person pays you in Indian rupees, your work is done. Now you're worried about whether the Mumbai person will give you money or not, so you ask him for some guarantee. The Mumbai person will go to his bank and say, see, I have deposited 20 lakhs in my account. Based on that, you give me a letter of guarantee. So, the bank, let's say State Bank of India, gives the Mumbaikar a letter of guarantee for 20 lakhs. That is communicated to the bank of the Bangalorean. Let's say Bangalorean's bank is Bank of Baroda. So Bank of Baroda gets an intimation from State Bank of India, Mumbai, that the Mumbaikar is good for 20 lakhs, and based on that, the Bangalorean sends goods to Mumbaikar, and he keeps on sending consignments. Now, how Mumbai person will pay is depends on what the deal has negotiations have happened. The bank SBI will transfer to Bank of Baroda of the Bangalorean the money. The instructions could be consignment has come, release in 15 days or release in 30 days, depending upon the credit period. Alright? So, this is the way it goes on. Once the consignment value reaches 20 lakhs, the sent consignment value reaches 20 lakhs, the Bangalorean will stop sending the goods till he gets another letter of guarantee from the Mumbaikar about the money. Alright? Then the transaction gone. Of course, it will not stop as I say stop, but in the middle there may be a break or may not be a break. Before the money expires, the Mumbai person may put in more money and send one more letter of guarantee to here for another 20 lakhs or 30 lakhs, whatever. And this is the way things go on. All right. Now, this is in India, domestic. Yeah. A Bangalorean is fine with Indian rupees. A Mumbaikar is fine with Indian rupees because our banks honor the money. We get our guys. Some of you say good morning to me. I'm getting only yeah. No one is saying good morning. Are you there? Yeah, you still sleeping? Okay, I took class by mistake yesterday. There was no, according to the timetable, it was not my class. I misunderstood and took the class. So I hope it's okay. Right. Now, I was telling you about domestic transaction, how consignment takes place. Now, suppose an Indian from Bangalore sends goods. Good morning, Janeshwari. Sends goods to Dubai. So, as I said, the letter of guarantee will be letter of credit, LC, I think it is called. When I do the documentation, I will tell you. All right. So, what happens? The Dubai say, let us say we have Bank of Dubai. I am not very sure about what are the banks in Dubai. Okay. I'm not sure about the banks in Dubai, but imagine Bank of Dubai will call it. So the Dubai person will tell the Bangalorean who send the consignment and he will go to his bank. His bank will be Bank of Dubai. He will deposit in Dubai currency. See, since I'm not very familiar with Dubai, let us talk a bit of Kuwait. I was in Kuwait for a while, so a little bit of Kuwait I know. 2 years is not a whole lot of time to know much about Kuwait. I know about, I could speak their language. Apart from that, it's a bit of knowledge of going about that sort. We lived in a place called Darwaza Abdul Razak, which was the hotbed of the war during the. Initially, we lived in Darwaza Abdul Razak, and then we lived near the Kuwait church, near the beach in Raja Building. Raja Building was very famous. There was a shop in the ground floor, and people, Indians, used to flock that shop on Sunday. I couldn't come out of my building. So many people used to be outside the building on Sunday because Sunday is an off, used to come to church or whether you're Christian or not, they used to be around that place, enjoying themselves and all that. So probably that was a place where you could tell your friend, you don't know anything in Kuwait, meet me in Raja building, near the Raja building and Raja stores, I think. I've forgotten. I was in the third floor, opposite the Kuwait Sheraton. So let us talk about Kuwait. Okay. Now, in Kuwait, what happens? Suppose we have a Kuwaiti, and the Kuwaiti tells Bangalorean, I want goods from India for so much money. What happens? Letter of credit, let us say we have Burgan Bank there. The Burgan Bank in Kuwait is the bank that the Kuwaiti is banking with. And Burgan Bank gives a letter of credit. Here we'll talk it as Union Bank of India. Now, Kuwaiti deposits, Kuwaiti dinars. Kuwaiti dinars are very strong, undoubtedly. They are nearly 200 rupees, one dinar today, Kuwaiti dinar. I have to check and tell you the exact this one, money and that. So this is the way. What happens is, if when the consignment goes ahead, if the Kuwaiti sends money in Kuwaiti dinar, what is it useful for to the Bangalorean? So the Bangalorean will say, send me in a currency that is good enough for me to use it even if I want to make any deals with, say, Japan, or I want to send or receive consignments from, say, Germany or France, or I want to anywhere. I give you example of Europe and Asia. So I want a currency that I'm familiar with, and people will accept in, say, Japan as well as, say, Germany. So as I told you, in the gold standard, when I talked to you about the gold standard, the American dollar was the most comfortable. Uh, the American dollar was the most comfortable currency. So there is a high likelihood that the Bangalorean and the Kuwaiti will deal in the goods, provided the payment is made by the American dollar. I'm a repatriate of Kuwait. I was in Kuwait in 1990 when the Iraq invaded Kuwait. Iran war concluded in 1988 when I had just gone to Kuwait. And in 1990, I remember of course, how can I forget? Iraqis invaded Kuwait while we were still in Kuwait. I'll tell you sometime about our experiences. I have written in one or two websites also. One website, sorry, not more than one. And then, yeah. So we are back to the Kuwaiti Indian. See, before the war, one Kuwaiti dinar could buy $3 American, and it changed after the invasion of Iraq into Kuwait. Three Kuwaiti dinars would buy $1 American. How things changed then was, I can talk about it. It is the economic turn of events are international currently, thanks to the virus, etc. But that time it was between a few countries, some few countries were affected, including Kuwait. So, see, India is a great country. We were all stuck in Kuwait, and then fortunately, our dollars brought us to Baghdad, and we flew from Baghdad to Amman. Amman is the capital of Jordan. King Hussein, the father of the current king, King Abdullah, had great diplomatic relations with everyone, including Saddam Hussein of Iraq. So he allowed, and he had great relationships with India. So he allowed Indian planes to land in Amman. I flew with my husband from Baghdad to Amman, and in Amman airport, they did not allow us to go outside. There was no reason to go outside anyway. We didn't have any money, that we could spend in Jordan. Our dollars were down to the minimum, and we were in the airport. I remember buying one sandwich for $10 American. One sandwich in the airport. There was no way that we couldn't starve, isn't it? And that sandwich we had to share because the dollars were depleting. And then the Air India planes had landed. According to first come first served basis, the Air India planes, lifted us out of Kuwait. And I was telling you, they marked on they stamped on our passport saying repatriate from India. We were not charged anything. And then they said, whenever you fly out of India, we are going to make you pay for this flight. But in a few months, about 11 months later, the parliament passed a decision that no repatriate from Kuwait is going to pay anything when going abroad. Again, before you could travel, you had to pay the government of India or whatever you owed the government of India, but they maaf kiya. They said that was 18,000 rupees for us, 9 plus for me and my husband. They said the government of India. So government of India is a great supporter for us Indians. You have to be proud that you are an Indian. Whenever there's trouble, then you know what the government of India does. It was the I.K. Gujral, the foreign minister, who came to Kuwait and brought us back, tried to bring us back. I was invited because I was in the family way. They said there were 350 plus seats available for ladies and children, small children. But leaving my husband there and coming alone was not my cup of tea. But later on, we managed to come to India, and so that's why in any kind of situation, you see, India has won. Even now, by God's grace, we are not going great in our fight against the virus. I request all of you, my students, to stay at home and help the government fight this virus. what happened recently, attack on COVID warriors, is very sad, pathetic, and shameful for us. That did not happen yesterday. The Supreme Court, well, I forget, has passed a rule saying attack on a COVID warrior is cognizable and non-bailable offense, and if you could face 3 months to 5 years for attacking a COVID warrior, and if the injury is serious, the sentence could extend to high Praveen Sikavatelva. Praveen always has to grin. I love it. Always be happy, Praveen, and share the happiness to others. Okay, don't change at all. I'll be very sad if I see you change and become serious. All right? Yeah, hi to you too. Okay, now I was, where was I? Yeah. So the government has passed a rule that people non-cognizable and non-bailable offense, and if the injury you have caused to a COVID warrior is serious, then it is up to 7 years. See, what I can't understand is how can you do something to someone who's trying to help you? How can we be so not, don't want to say more about it. It's very sad and sad state of affairs. Let's come back to international financial management. I was talking to you an example of a consignment that with a transaction, financial transaction that Masood, good morning, that takes place between Bangalore and Mumbai, they would have no issue about the foreign, about the money, kind of money that is paid. Mumbaikar also likes Indian rupees. Bangalorean also likes Indian rupees. It can buy them now. Bangalorean can deal with Delhi, and Mumbaikar can deal with Chennai if he wants, and he can use both of them can use the same currency, Indian currency, to deal with some other people. But I was giving you the example of an international transaction where international currency is involved. I was talking to you about a Bangalorean dealing with a Kuwaiti, and Kuwaiti says no, cannot say I will give you Kuwaiti dinars, and Bangalorean will not accept Kuwaiti dinars, though the Kuwaiti dinars is very strong and can be easily exchanged, but a common currency like the American dollar, I have already told you when I talked to you about the history of the gold standard, how an American dollar today is very powerful, and it is the medium of exchange for most financial transactions. So the first thing I'm talking to you about the foreign exchange risk, and I gave you the details. Now, next we'll talk about in international management, financial management, political risk. Recently, see, in international business, you have to understand the equations between nations. It is very important. See, the United States has been asking India to buy less or no oil from Iran because of the standoff it has been having with Iran. All right. So in this case, what happens? Iran has given India oil at a very reasonable rate, and how will India react? You know. So when you talk about this, I'll still tell you that oil is still the price of oil, etc., is one of the biggest game changers in international business. Very big game changer. I'll talk to you later about it. I've talked to you sufficiently about OPEC and all yesterday, but I will talk to you. It is very necessary that you know what is happening in the world so that by the time you finish your MBA and come out, you're armed with the knowledge of what is happening in the world and you can look for jobs accordingly. Now, what is political risk? See, governments, ministers meet each other and they sign some documents, memorandum of understanding, or some the government say we will help you with this. I will take steel from you and you give me this, etc., etc. So according to what understandings are signed, and there will be a certain quota. This is necessary for internet an exporter and importer to understand. If there is a quota of import of say tea, since tea is manufactured extensively in India, you cannot say I want Japanese tea and let me import it. Then if you can import, there will be some conditions about how much tea you can import. And if there is a quota of import, then you will be given a percentage of it. If there are 100 people, each one will get 1% of the quota. If there are 10 people, you will get 10% of the quota. You understand? So your capacity of Mantike petak polema. Okay, so this is what happens now. Um, Okay, if there is a Bangalorean dealing with the French person, you will not accept French currency, isn't it? You may not even accept euro. You may say, pay me in American dollars. Now, political risk happens when governments change, when there is a new regime, okay, when there's a new regime. Uh, in India, as an Indian government, political risk is minimum even if the party changes along with the government. Now, let's see, we had a Congress government, now we have the BJP government. The policies of international trade are not changed by any government. Whatever happens, the policies regarding international trade, the industrial policy, is hardly touched unless it is for development. See, I want to tell you one more thing. Yesterday, the latest the Starbucks is coming to India. It is buying about 9.9% or something of the stake of Reliance Jio. Starbucks is investing in Reliance Jio 9.9%, 423 something crore. Please check that news, yesterday's news. Uh, Reliance Jio belongs to Mukesh Ambani, and this one. And there are some pop-ups which keep coming now. It's very disturbing. All right, you can't help it, I guess. Okay, class, shall we go ahead? Yeah, this is it. Okay, shall we go ahead? I talked to you about political risk. Simply, sometimes when the regime changes, you look at the dictator. You heard of Idi Amin. Idi Amin was the dictator in Uganda. See, when I was in high school, there was a magazine, and in degree also, there was a magazine which petered out. I don't know. It was called the Illustrated Weekly of India. You know, we get the Bangalore Mirror today. It looked like that, but slightly larger, or smaller than the newspaper, but larger than the Bangalore Mirror size. So what happened is Illustrated Weekly of India was a great magazine. Most of my general knowledge, I won the overall Mangalorean first. I stood first, and I was called Miss Intellectual Giant. Yeah, and the giants, giants of India. You have this giants organization, So this Illustrated Weekly of India, through telescopic lens, had taken pictures of Idi Amin's freezers, and I remember seeing heads, mundi bolte hai na, heads Happy day, good morning, sweetheart. Yeah. Heads of his political, supposed to be his political rivals in the freezer. I read somewhere that Idi Amin is no more in this world. Idi Amin believed that if there was a political rival, he would kill him, and if he ate his meat, it would make him stronger. I have seen the photos of heads of dead people kept in the freezer. It was taken through telescopic lens, and this photo had come in the Illustrated Weekly of India. So, about political risk, I was trying to tell you. I have a friend who is in her 80s. She and her husband, with her two sons, I think. She was in Uganda. She worked in a bank, and she said she had saved to the tune of about 4 to 5 lakhs in Uganda's her own bank. So one day Uganda tells the Indians, "I'll give you 3 months. You leave Uganda. You can't take anything out." So they had to leave. Some clever people immediately made all their belongings into gold, and within 1 week escaped from the country. It seems within 1 week, the Idi Amin soldiers became smart to what the Indians were doing, and they started in the airport. They started taking away the hardened, whatever was converted into gold, they started taking away. So this is how a change in the political regime. If you were an Indian were doing some kind of business with Uganda, how would you deal with it at that point of time? Everything would change. You would lose your money, you would lose your transaction, you would lose your consignment, all these things. So political risk is something else in international business. Market imperfection. See, this is one very big difficulty we have. I talked to you about the recession in America in 2008. What happened is, in the effect it had was on America, but hardly anything on India. If I remember right, I talked to my students, some evening students also, about how they were facing this recession, and most of them who had any problem were working with MNCs that were basically American, or MNCs that had some transactions to do with, or Indian firms that had some transactions to do with American firms. Apart from that, since I told you, our financial structure of India is very, very good. We are on the conservative side. We make sure that for every rupee there is a teeny weeny bit of gold there. Of course, we have seen a lot of ups and downs with the rupee now, valuation of the rupee. But even then, we are on the what to say, that we are always very conservative. We are traditional. Everything is very perfect. I gave you the example of how difficult it was to buy 500 American dollars for us when my mother wanted to go to the United States in 1980, because we had a deficit balance of payment. It's very difficult that time, and I paid. My mother paid. My father paid a lot of money. I do not know, and I cannot remember also, even if she did tell me how much it is. But so these are the market imperfections. You cannot expect that the same thing exists in like same banks. You go to Indian bank now, and you're like, you want something, tuck 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 tuck, everything is done. Go to the international business section, everything is done so perfectly. It is done. The smartest of the smartest people are there in the international business section. Not that the others are not smart, but they are there, very proactive people. So, but will you get the same kind of banking facility in another place? Will you see? I was talking to some of you, and some countries from which you are, I will not mention, you all don't even have a stock exchange. and we are talking about stock exchange listing and all that. So you not cannot get the same kind of financial infrastructure that you will get in India in some other country. There may be countries who have a better infrastructure, I don't deny that, but expecting it will be difficult. All right? So, something like this. This is the market imperfections. When I talk about international financial management, I'm not talking about culture, how people are different, how they want customizable product. No, I'm talking about the financial market imperfections. Next, expanded opportunity set. This is a very strange thing. There's how to buy, where to buy, how much to buy, what kind of currency to buy, all these kind of things. Okay, let's go on. Class, just keep on this thing uh, sliding. Then I told you about maximize shareholder wealth. It is always it has always been the goal. Like even if you talk about mercantilism, you always said, "Let us make the king rich; we will be rich." Okay, let us make the king. So something like this. All right, and let's come back to you go on. See, sometimes stakeholders, not sometimes, it is always stakeholders should and does include employees, suppliers, customers, etc. I talked to you about, I think, carrots. So now that I'm doing it, I remember that I did this already. Let us go on. Please go on, keep on moving your slides. I talked to you about economic integration, GDP of the world, liberalization of protectionist legislation. I gave you the example of Ford cars, how they are manufactured in America in order to avoid the protectionist legislation, and that makes the Japanese cars that are brought from outside, from Japan into America, more expensive and less competitive in terms of American cars. Then I talked to you about WTO. We have already talked about WTO, NAFTA. I told you, I'll give you a case example of how Mexico has gone under a lot of trouble thanks to the NAFTA. I've explained this. So we will go ahead. Selling off state, we know about nationalization, liberalization. Please go ahead. My slide says there are 60,000 MNCs in the world. More. Okay, come to this one. Come to the slide which says bimetallism. Bimetallism means having a standard like gold standard. No, there were two metals, silver and gold. Silver was also a very popular standard for currency some years ago, but silver lost its charm when compared to gold. All right. So bimetallism before 1875, the currency was either silver coins or gold coins. It wasn't a standard. It was actual silver or actual gold. Even now, if I want to make a finger ring, I want to make it in gold or I want to make it in silver. In silver, I get a gold finger ring for a much lesser value as compared to gold. I read somewhere the price of gold has fallen. Please check that. All right. Okay. Good time to buy if anybody wants to buy. If you have a function coming up like a wedding and you have kept the money ready for jewelry, perhaps you should see if the gold price has come down. You may get more gold for that same amount of money. All right, here we are. Then we had the classical gold standard. See, bimetallism means silver and gold coins were given. I want a laptop. Laptops didn't exist then. I have to give so many. Say, I want to buy a cow. You give me 500 silver coins, or you give me 100 gold coins, or 50, whatever, how the rate was. But next you have the classical gold standard. I explained to you. Gold standard is where currency is pegged to the gold. Okay. Then you have the interwar period, 1915 to 1944. I talked to you what happened, beggar thy neighbor policies, and the League of Nations was set up to help countries overcome the effects of the First World War, plus to help, in any way for international trade, not to fight with each other, to have peaceful relations. But it wasn't very successful because the bad feelings of the First World War were still there with countries. Then you have 1929 to 1940, the Great Depression. So all these things were not that the world was, peaceful. It was a restless place. And again, the Second World War took place. After the Second World War, countries thought enough is enough, but we have not learned our lessons. If you see the last year, how much of strife we are having with each other, the attacking of, everyone wants to attack, get the supremacy over oil. You may wonder why oil is so this thing. I'll give you at the end of my class why oil prices are still the best way to say. It's like an index of the world economy. All right. So interwar period 1915 to 1944. I told you in 1944 there was a conference of the Bretton Woods conference, and this was the year the UN, United Nations, started. Also, this was the year that we have the World Bank. I told you the World Bank is a conglomeration or a combining of the International Monetary Fund and the International Bank for Reconstruction and Development, basically formed for the reconstruction of war-torn European countries in the world. Later on, they started helping everybody. You have the IDA, etc. IDA always gives international, development agency. It gives soft loans where you do not expect them. They say no interest, but you do not expect them to pay back at all. Bretton Woods system was there from 1945 to 1972. The flexible exchange rate regime came in 1973. This part I have not covered. I will cover to you in for future classes. See, you look at this. Bimetallism. Look at the next slide. Bimetallism. A double standard in the sense that both gold and silver were used as money. All right, I explained to you. I want to buy a cow. It is either 500 silver coins or say 75 gold coins, as the case may be, for the value of gold and silver. Some countries were on the gold standard, some on the silver standard, but there was no pegging of currency as such. All right, the exchange was okay. I'm on silver, you will get your silver. I'm on gold, you will get your gold. Some on both. Both gold and silver were used as international means of payment, and the exchange rates among currencies were determined by either their gold or silver contents. See, one important thing. I will give you 50 gold coins, I'm saying. But the gold coins, how much do they weigh? If you have gold coins from India, India was very rich, still is. Gold coins from India, each coin say is 100 grams. You may have gold coins from some other country. Each coin is only 50 grams. So how will you say I want Indian gold coins 10? All right, something like this. Or the other gold coin I said I want 20 of these. So yes, yes. It's like coming late to class for hard. It's okay, Ahmadiyya. So it's okay. It happens. But you can watch my slide because this is automatically, Facebook automatically records it, okay? It is really a hot day class. Okay. Now, both gold and silver were used as international means of payment, and the exchange rates among currencies were determined by their gold or silver contents. Okay. Grisham's law implied that it would be the least valuable method that would tend to circulate. I can't really figure out what it is. Least valuable metal that would, it doesn't matter to us. Let's go ahead. I will try and tell you afterwards. See, look at the classical gold standard. Next slide. During this period, in most major countries, gold alone was assured of unrestricted coinage. Alright? Only gold coins. There was two-way convertibility between gold and national currencies as a stable ratio. All right, either you had gold or you had money under which gold was kept as a collateral. All right, safe. If you say there is so much gold for my currency, when you exchange the currency with the national bank of the country, you would get your gold, for example. All right, suppose it was Bank of England. All right, and you said, I want Indian currency. I have so much of the pound. Give me Indian currency. The bank would give, or perhaps exchange it in gold. Now, gold could be freely exported or imported. The exchange rate between two countries' currencies would be determined by their relative gold contents. It was that, say, Indian coin, one Indian gold coin was 100 grams. Say one country, say country B, gold coin was only 10 grams. So 10 coins is equal to one Indian gold coin. All right. Say countries 10 coins is equal to one coin of India, something like this. All right. Now next, see. For example, if the dollar is pegged to gold, saying US dollar 30 is equal to 1 ounce of gold, and British pound is pegged to gold, 6 pounds is equal to 1. See, it's like this. 1 ounce of gold in America is $30. We are talking about the value of 1 ounce of gold. In America, say 1 ounce of gold, yes, my one, we are talking about 1 ounce of gold. In America, it is $30. 1 ounce of gold is you have to give $30. In UK, 1 ounce of gold you have to give 6 pounds. So what we do is the common factor here is the ounce. So $30 is equal to 6 pounds. All right, divide 30 by 6. 1 pound is equal to $5. This is how the rate happened. I will repeat. We are looking at the value of 1 ounce of gold. 1 ounce of gold in US costs that time, let's say $30. In America, you could buy 1 ounce of gold for $30. In UK, that is in Britain, you could buy 1 ounce of gold for 6 pounds. So the common factor here is 1 ounce of gold. If you remove that, you will get $30 is equal to 6 pounds. Divide $5, 30 by 6. $5 is equal to 1 pound. Is that clear? Alright, look into that. The classical gold standard came in 1875 to 1914. Okay, class, this is not very necessary. You just browse the slide, interwar period. This I've already gone through so many times. So look at the Bretton Woods system. Come to that, 1944, 44 nations met at Bretton Woods, New Hampshire. They wanted to start design a post-war international monetary system. I've said this before. Why? There was no rate stability. So the result was the creation of the IMF and the World Bank. We know about it. Under the under the Bretton Woods system, the US dollar was pegged to gold at $35 an ounce. 1 ounce of gold, $35. And other currencies were pegged to the US dollar. Okay. Now let us say India. 1 ounce of gold say 7 rupees, okay, or 70 rupees. All right. 1 ounce of gold in US was $35. Let us say 1 ounce of gold in India was 70 rupees. Remove the ounce of gold. 35, sorry, $35 is equal to 70 rupees, or $1 is equal to 2 rupees. Something like this. All right. So here we are. Each country was responsible for maintaining their exchange rate within plus or minus 1% of the adopted par value. Now see, I said $1 is equal to 2 rupees. You have to maintain that. How it happened? Because the value, see, it is like this. The dollar was 1 ounce of gold, $35. All right. Here I said 1 ounce of gold, 70 rupees. So you have to maintain it. All right. Whatever happens, you have to maintain it. Only then the exchange rate will be same. Maintain it within plus or minus 1% of that value. All right. How? Every every dollar or every rupee has a backing of so much gold. Suppose the value of gold came down, then what you have to do? The value of gold you have will be lessened by say 10%. The value of gold in the world came down by 10%. So the value of gold you are holding comes down by 10%. So you have to buy that much of gold and keep it so that it becomes 100%, not 90. All right. Say you have 100 kgs of gold, and because it became 10% less, though it is 100, it is valued only at 90 kgs. So you buy 10 kgs or whatever, and the value should be equal to 100 kgs. So you bought gold or you sold gold or you maintained it such that if you wanted to peg your currency on the gold standard, you have to maintain the gold in your reserves. I think here I'm clear. Amrin, good morning. Okay, it was a dollar based gold exchange standard. Why dollar based? As I said, 1 ounce of gold is equal to $35. That was said. Then you peg 1 ounce is equal to so many rupees, and therefore remove the common factor of ounce. So $35 is equal to how many rupees? Is that clear? Suppose 1 ounce in India was 700 rupees. Okay, $35 in America, 700 in India. Remove the 1 ounce. $35 is equal to 700 rupees. So make $1. 700 by 35, 200 rupees. You understand? Or 70 rupees, something like this. So I think you're clear. Now, the flexible exchange rate system from 1970 was there. I think I have to explain it well. I will not go into explaining here. I think I given you this. I don't know. Um, this is a. It says this slide. I don't know whether I've sent you. I will send you. I just want to talk to you. This is recent. This is April 22nd from the Simon Jack Business Editor. Oil. Why oil is the most important price in the world? Whether you like it or not, the most important commodity in the world is oil, crude oil. Its price can tell not only what's really going on in the world economy right now, but it has an influence on what could happen in the future. See, we was talking to you about oil futures in May, in June, how they have come to negative minus 35 point something percent, dollars. Right now, it is telling us this oil price is telling us, it came to $3 and $1 on Monday per barrel. Right now, it is telling us that the world economy is in big trouble. A crisis not yet revealed in backward looking economic growth figures. There was a worldwide shock last week at the freakish reading of a price of minus $40 per barrel of US oil. This was eye catching but slightly misleading. Oil is traded in contracts that expire on a given day in a month. Futures. I told you yesterday, oil is traded in futures. So, how come I know the price or we know the price of oil in May or June, coming month? Then it is because it is dealt with futures. Whoever is left holding the contract when the contract expires has to take delivery of the actual physical oil. I told you yesterday, electronically you deal with it, and you have to take the same supply of the actual physical oil. Who has got place? Demand is stagnant because nobody is running their cars, aeroplanes are not running. So demand is stagnant, and thanks to Saudi Arabia and the United States, uh, they have not cut their production. So there you are. I also told you about Mexico and before the G20 countries what happened, isn't it? So there you are. Who has got place for storing the oil? Oil is so most people who trade oil have never and will never see a barrel of oil, let alone take delivery of one. They just trade in the oil. Oil contracts are used by airlines and industrial companies to manage and insure themselves against big swings in fixed costs. Why do you deal in futures? Let us say I have in my backyard a row of mango trees. Now I want to make profit out of the mangoes. Say the mango trees are yielding extremely good mangoes. And say every year, let's say I have coffee in my backyard and I want to make a profit of my coffee. Let us say, as far as my knowledge goes, you harvest the coffee in December. So in December, now it is April, I don't know whether I will get the price I want for my coffee. So what I do is I deal with someone who is buying the coffee, and that person and I talk, and I say I want, says, 200 rupees per bag of coffee. Let us say hypothetically, a bag of whatever coffee, and the person says, well, 200 is doubtful, I'll give you 190. I said fine, now 190. So that person, the buyer, and I make a deal that in December that person will buy the coffee from my backyard for 190 rupees per bag. Let it be any bag weight and all, we are not bothered. We are bothered about 200 I wanted, I got 190, I'm satisfied. Now come December, if the price of coffee falls to 100 rupees, it is not my headache. The poor fellow who dealt with me has to pay me 190 because we have this thing, and even an advance may have been gone. All the uh, whatever goes into futures, how they are traded. Whatever is the deal, he has to pay me, or whatever, everything has happened. But imagine the price of coffee in December rose to 400 rupees, and he still buys from me at 190. Okay, it's a sad state for me in that time. I would have got 400, double the price of what I wanted. But at the same time, I don't lose sleep for so many months saying, what will happen to my coffee? you know it buys me peace of mind, it buys me the money I want. Say 200 rupees gives me profit plus whatever I've spent, I'm very happy basically with 200. But if it goes to 400, I'll be unhappy. This is why futures are done. So, oil contracts, this is what oil contracts, now based on my example, you look at this. Airlines and industrial companies manage or insure themselves again. See, airlines want oil because, you book your flights 3 months ahead. So, airlines know my plane is going to run full from Bangalore to Mumbai, so it has to run the plane it has to, it has to have fuel. So suppose there are fuel swings and all that, then it's not a good thing. So here we are. A chronic lack of storage capacity in the United States meant that the usual erratic swings on contract expiry day become extreme, as traders were willing to pay anything so that they weren't left holding the barrel. You understand? There is no place to hold the oil. All right. So as far as possible, they don't need to physically buy. This is what they do. What do you mean? Then where does the oil go? Oil goes from the producer to, say, airline companies. All right. You are trading with it. The airline company bought from you, but it doesn't come to you on that particular day. It goes straight. So you don't have to have a storage facility for the oil. However, the fundamental issues behind the technical, weird, and historic price anomaly are very much real. Like any commodity, price is driven by supply and demand. Demand for oil is a very good proxy for global economic activity. See, stagnant demand for oil means there has been no global activity. Obviously, all our cars are kept here. BMTC is not running, KSRTC is not running. There are no autos, there is no Ola, yeah, nothing. Okay, so there you are. Um, So right now, all the talk is of demand destruction. Planes are grounded, cities emptied of cars, and factories are mothballed. What do you mean by mothball? When you want to store something away, you put mothballs, this naphtha balls. So factories look as if they have put the naphthalene balls for storage, like how you keep in your cupboard and all, naphthalene balls. The situation was not helped by the fact that there was an oil price war going on between Saudi Arabia and Russia as COVID-19 spread across the globe. All right. Since then, the big oil producers have cut production, but such is the collapse in demand that they can't cut fast enough. They're trying to cut supply by cutting production. But the situation is so bad that there is not enough Brent crude. The benchmark oil of the UK has continued to collapse, hitting a 20-year low yesterday morning of $16. The last time it was over 70. Alright? Cheaper oil can mean lower petrol prices. Is it true? It is not true. I told you yesterday, cheaper oil doesn't mean cheaper, lesser this thing. Alright? A massive fall in the oil price is like a global tax cut on businesses, big and small. If airlines can survive and the traveling public return, then they could lock in low prices for their biggest single outlay fuel. See, now what I'm going to do is I've already talked for almost 1 hour, and today's class has been slightly technical. I will continue with this in my next class, and I'll tell you what happens, the latest. As I told you, India has taken some severe stand, strict stand on people who are attacking COVID warriors. Also, okay, we have been talking a lot about oil. Also, I just want you to remember that today I've taught you one very serious, important concept. The my dog is coming and licking my leg. So, the serious, important concept that I taught you is how the gold standard happened, how the currency was pegged. I repeat, if some of you have missed it, it was pegged to how much was the value of gold in each country. I told you in Bretton Woods conference, they pegged to the gold to the US dollar. The US dollar was very steady. I told you why. Because US never joined the war till the last minute. And even when it did join, it was for a very short period of time. And the war ended. the Hiroshima Nagasaki happened and the war ended. All right. Now let us come back to the gold standard. Please remember, in 1944, 1 ounce of gold was pegged to 35 American dollars. 1 ounce of gold. Now, the way the currency was pegged was, how much does 1 ounce of gold cost in your country? Suppose we talk about, say, we talk about Kuwaiti dinar. 1 ounce of gold is equal to, say, 10 Kuwaiti dinar. Alright? Dollar was 1 ounce of gold, 35 American dollars. Kuwaiti dinar is 1 ounce of gold is equal to 10 Kuwaiti dinar. Remove the common factor of 1 ounce of gold, equate 35 American dollars to 10 Kuwaiti dinar. So 35 divided by 10, and you get 1 Kuwaiti dinar is equal to 3.5 American dollar. You understood? I'll give you an example in Indian rupees. Suppose 1 ounce of gold is equal to 70 Indian rupees. We all already know that 1 ounce of gold is equal to 35 American dollars. Remove the common factor of 1 ounce of gold. 35 American dollars is equal to 70 rupees. Divide by 2. 1 American dollar is equal to 20 Indian rupees. 35 divided by 70 is 2, isn't it? 2 Indian rupees. You can do the math. If I've done the arithmetic wrong, that's no okay. You understood. So the whole thing was, take one take 1 ounce of gold. How much it costs for you? In America, 1 ounce of gold costs $35. So $35 is equal to how much it is here. Do you understand? So that was the thing. This is the main thing that you have to. This is the takeaway of my class. How the gold standard happened. All right. I will come back with the next class. I want to stop now. I think the time is around 11. Yeah. You have another class at 11:15. I think it's 11:10:53. It's okay. My class was little technically heavy, so I don't want to continue. Okay, class, I'll say bye. Hi to everyone who has said good morning to me. Good morning to you all too. I want to see how many views are there. Yesterday there were 80 views. Today I don't know how many views are there. Yesterday I marked attendance as 100% because you are 79. So today I have to see and I have to mark attendance because I have to report. Wahidullah, how are you? Okay, all good. Okay, shall I stop 1 minute? Okay, so I'm in the last part of my class. Bye, class. All of you, keep smiling, stay home, stay strong, be cheerful. God bless you. Jai Hind, Jai Karnataka.